Now you listen to all these presidential candidates talk about, all these different programs they want to do, where you can just basically make all the money you want. Who cares? Just create as much as you want and just fund all these things as if there are no consequences. There are no ramifications to, what Weimar Germany did or what Venezuela is currently doing or Zimbabwe.
Man of Mastery, episode 27. Welcome back and happy Halloween. Or more accurately, by the time this airs, it's November 1st, so it's a day late. And as every journey has its setbacks, I'll own this one. My weekly cadence of getting these podcasts out on Thursday slipped this week. That's completely on me. But I hope today's podcast and interview is well worth it. Today, I have a guy on who personifies the concept here that we talk about in terms of performance and differences and edges that one can look for apart from the norm to accelerate performance. We've talked to guys in the past in that same spirit like C.J. Kirk, Brian Dougherty, Brent Gleason, Nick Hayes, Andrew Clark, and others. Today's another innovator who has picked his own path, is willing to think critically and creatively. He's been resilient in the face of a decade of markets and herd mentality and conventional thinking saying that he is wrong. And he's had the fortitude to stick with what he believes and knows is right for himself and his family. As you'll hear in today's interview, Craig's business focuses primarily on gold, silver, and other precious metals, and Craig's outlook on those as well as other financial markets, the monetary system, U.S. debt, the world banking system, other geopolitical influences and events. He's really a wealth of information and provides an incredible service to those who just don't have time, like me, probably like most of us, don't have time to dig into the level of detail and awareness that Craig is able to bring and offer and provide some critical analysis to, both from a fundamental and technical perspective. What Craig and I talk about today, and a couple things you can take away from this episode, this is not doomsday prepper kind of stuff. This is a concept of putting potentially a portion of your investment portfolio into gold and silver. And really underlying considering an action like that is understanding why and why you might want to think that way. So Craig, as he says today, he's the first to say, go out and get educated, just learn more about it, understand the facts, and understand some of the concerns to the financial markets, the way they're run these days, and how that might affect some of your other wealth, your investments, and your other assets and asset preservation. To that end, the TF Metals Report, TFMR, is an incredible source of information. I found it myself a decade ago in the global financial crisis, which is where I discovered Craig Hemke, Turd Ferguson, Turdville, and the Turdites. And it truly is a different way of thinking. It's refreshing. He approaches it with a sense of humor and irreverence. So I would definitely encourage that you check it out. I have been in the past, and once again am a subscriber to that. I say that with no business association or relationship to Craig and his business, simply as a customer myself and a fan, with a recommendation to pass along for your consideration. So those are a couple quick action items for today's episode, is to take a look at least the free version of what Craig publishes in his website, tfmetalsreport.com, and get educated and consider whether some gold and silver belong in your portfolio. Today is a quick introduction to Craig and his incredible wealth of knowledge. And although it wasn't a very long one and we could barely tap into some of his experience and wisdom, I would definitely say head over to the website and check it out for more. I'll have show notes and links in the website at manofmastery.com/027 for this episode. So with that, let's jump in with Craig Hemke of TFMR. Today, I'd like to welcome Craig Hemke of TFMR, TF Metals Report. Craig's also known as Turd Ferguson, the TF in TFMR. Craig, thanks for joining me.
Michael, it's a pleasure. and an honor. I really appreciate getting the opportunity to visit with your audience.
Yeah, no, absolutely. Pleasure. It really is all mine. I've been a fan and a subscriber and learning from you for, I think, a decade, maybe even a little bit more, since sometime around the last global financial crisis. You've just got such a unique perspective, apart from the herd mentality on finance and wealth preservation, and a view of the markets, and really a systemic and global view. So I'm excited to talk about this today. As you and I have talked a little bit, and what I'm doing with this mastery journey is around peak performance, around those little things, to think a little differently, to act a little differently, that really result in an edge that move things from the very average to the very exceptional in people's lives. It's all really founded and starts with mindset, but it does span domains from health to family, and certainly to career and wealth and finance. So I think this is going to be really interesting and a really good fit for the audience. And I really I'm excited to get you introduced to them. So do you mind maybe if we just start with I know we're a little limited on time today. Let's just talk a little bit about what your mission is and what your journey has been that's brought you to what you're doing with TFMR.
Well, it's, I don't know, probably not too unique versus other folks that have found themselves in a similar situation. I had spent, 20 years, something like that, 15 years as a securities professional, either as a stockbroker or what's called a wholesaler, which is a traveling representative of a mutual fund company, just in the industry one way or the other. And which is not a very fulfilling job, a lot of travel, a lot of time in Marriott's, things like that.
Right.
And I found that my experience was not unlike what a lot of traveling salespeople experience, where it's kind of a lightning bolt moment one day where you're just sitting in some random Fairfield Inn in some random town, and you're like, what in the world? What am I doing? When my kids were getting older, I think at the time my kids were maybe 8 and 10 or 9 and 11. And I was like, this is just ridiculous. You're on the hamster wheel, right? Chasing money, because you can never have enough. That's what I always tell people when they get out of college. Don't do something just for money, because it'll never be enough. Your income will grow, but then your expenses will grow, and you'll need more income, and then your expenses will grow again. You'll need even more income, and it's never enough. And it's such a road to discontent. Find what you love and pursue that instead, and then it won't seem like work, and income and wealth may or may not follow from there, but at least you'll be happy. And so I'm on that hamster wheel, and I'm like, this is just crazy. I'm going to keep this up, being in hotels 2, 3, 4 nights a week, and my kids are all of a sudden going to be gone. And what am I doing? So I took a leap of faith. I had a business idea that I had been kind of incubating in my head for a couple of years. And I thought, this ought to work. This should work just fine. Let's give it a try. Well, what I found out, having never run or started a business before, you never have enough capital, right? Right. You always think you do. You think you do, but you don't. And as that business was failing, I had some, I don't want to say free time, but I had some time to observe. And it was right toward the end of the, if you want to call it that, at the end of the financial crisis in 2009. And I started kind of opening my eyes to what was really taking place in the economy and the markets, and how they actually operate, and what were the actual forces behind them, which were a little different from what, my history as a stockbroker had taught me. And I began to interact with this website called Zero Hedge, which at that point was like a blog spot site. It was nothing. It was a very small website. It was that, in joining that website, you got to pick a fake anonymous name, and I picked the name Turd Ferguson, which is, Michael, had I known, I'd have picked something more glamorous.
Right.
But anyway,
it's based on a Burt Reynolds character.
Yeah, exactly.
That's pretty glamorous.
It's a Saturday Night Live skit, where Norm Macdonald it's a Jeopardy skit, Celebrity Jeopardy or something like that on Saturday Night Live, and Norm Macdonald's playing Burt Reynolds, and he changes his name just to make Alex Trebek angry. And I'd seen this skit, I don't know, day before, maybe. I registered at Zero Hedge, and I thought, well, that's a funny name. That's what I'll go by. So I still use that name on my site, because everybody's got, like any website, you've got, your anonymous login name that you use. And so I still use it there, but every place else now I use my actual name. But anyway, it was through Zero Hedge, and the precious metal started to take off in 2010. I kind of gained a following, and people said, you should start your own site. And I thought that was just crazy. What? Why? I've been trading commodities and options my whole life, but why would anybody want to hear what I have to think? Anyway, it just exploded. The timing was perfect and that kind of stuff. And now here we are, coming up on our 9-year anniversary of having a website. If anything, Michael, there are a number of lessons there, and I suppose we can unpack them a little bit. But there's, I've always felt that there's a certain amount of faith involved in this kind of thing. And I don't care what kind of faith you have, whether Christian or Muslim or, Jewish or, whatever. If you have a belief that you are accountable to more than just yourself, and you're willing to go out and try to pursue something that, I don't want to say that I'm just trying to help others, because obviously I have a business and that kind of stuff too. But if you go out and pursue your passion with the goal of I guess trying to be as impactful and as helpful as you can, a lot of times things fall into place for you. And so anyway, I think a lot of my personal story that kind of gets back to that too.
Yeah, no, kudos. I mean, absolutely. And really in line to what I've been exploring. You're a few years ahead of me, but certainly the focus of the topic that I've got here, it's really driven by passion and purpose, finding that fulfillment in doing things of meaning to yourself and hopefully in service to potentially others. And not to say that some business that funds the expansion of that mission, those aren't mutually exclusive. So
yeah.
Fantastic that you're here and you provide so much information to so many people. It's really, it's not so outrageous when you start to unpack the stuff that you talk about, but it is at first a little uncomfortable. I come from a bit of an econ background myself, at least academically. And, we've got Adam Smith and the invisible hand, and we sort of feel like our capital society, our markets are based on this efficient market theory. And we all know it's not perfectly efficient, right? Nothing is. And we read about things that we probably mostly don't understand, like high-speed computer trading and things like that. But I think when you start to really see what's going on with the, maybe non-asset backed financial markets, it just seems much darker and deeper than that. And then I think as I started to explore and learn and read, and from you and others, it's really a rabbit hole when you drive down into, okay, maybe something more physical, whether it's real estate or precious metals, can do some things in wealth preservation that less stable assets won't do. And then through some of your material, start to find out, wow, that gold ETF that I thought was a good idea may not really be, what I'm getting, or that I'm not getting what I think I'm getting. So given that you have kind of headed down this path, and a big part of your focus is around precious metals, can we talk a bit about what gold sort of really is and isn't, and what you think it means to people, or should mean?
Well, and I should make it clear, I didn't come at this from, there was never an intention of, wow, I have this great idea. I'm going to start a website that talks about precious metals, and I'm going to become, I still make fun of people that have newsletters, and they consider themselves gurus and market technicians and stuff like that. Because those people have been around since I first got my securities licenses in 1990 and before then. And I don't know. So I never intended to go down this road where all of a sudden I've become one of them. But I had a chance and was given this opportunity, like I said, when this first business that I had was failing, to mainly just sit back and observe. And that's still what I do to this day. I tell my subscribers to my site, TF Metals Report, is kind of an online community. I do analysis there, but to fully get it and interact, it's $12 a month. Okay. So it's enough that I can afford my ever increasing healthcare costs for my family and the servers and everything else that's on, that business owners have to deal with. And so what I do, what those people get is mainly I'm an observer for them. I sit here. I mean, we talk about prices and try to project where they're going and that kind of thing. But I'm mainly an observer because everybody else, doesn't really have time to watch this stuff on a daily basis. I mean, they're out there caring for their families and trying to save for retirement, and, put their kids through college and worrying about their folks and, what are they going to do in old age? Or maybe they're their own old age, all that kind of stuff. And so I just had this privilege, the opportunity to begin to observe objectively beginning in about 2008 and 9. And it was through that my eyes were opened. Specific to gold and silver, I mentioned earlier, I've traded commodities since I was in college, a lot of soybeans and corn and stuff like that, because I grew up in the Midwest. And I was a stockbroker, so I was always trading stocks and bonds and all that jazz. You don't have to focus on gold and silver for a very long period of time before you realize, something's unusual here. So these aren't like everything else. Okay, there's something odd about the way these things trade. And then you kind of start digging in a little bit and you start doing some research and you read about Nixon closing the gold window and the London gold pool in the 1960s and the institution of precious metals futures contracts in 1975. And anyway, you begin to figure out, and you went, oh, okay, now I see what's going on here. And so that has taught me a lot then about the forces, if you will, behind the markets. I mean, I used to think, or maybe I should put it this way. Back when I was a stockbroker 25 years ago, there was actually what people called a stock market, where regular people would do their research and they decide that Walmart was looking pretty good and that their earnings were going to be going up. And so therefore, I should buy 200 shares of Walmart at 45 and that kind of thing. Now that's like 10% of the daily volume on the stock market. The other 90% is high frequency trading computers that are pre-programmed, running on algorithms that just swap positions back and forth to each other at the speed of light, trying to nick each other for fractions of a penny. And so at the end of the day, then, if you can, knowing that, if you have an interest in getting the stock market or any item to move in a certain direction, then all you really have to do is to control the input factors that these computers are programmed to base their buy-sell decisions off of. And there's nothing organic about it. There's nothing natural about it anymore. Anyone can look at price charts and see how so many of them are starting to look alike. We're like, wait a second. These things used to be 100% non-correlated, and now you lay one thing on top of the other and they look almost identical. It creates a world of, I don't know, that appears to be stable. It creates a world that, it creates this, that, gives you this illusion that everything's great and hunky-dory. And so feel free to go out and buy a new house, a new car, and all that kind of stuff. When all the while, I just have this feeling that everything's on kind of this rather shaky, corrupted foundation. So that get back to your question, I guess, Michael, that's why I think everybody should have at least some, not all. I mean, no one puts all their money in anything, but a nice allocation, 10% or whatever, to physical, actual precious metal that you can hold in your hand, store in a safe, bury in the ground, whatever, as protection against, all of this crazy stuff that's going on around us.
Yeah, no doubt. I mean, I remember coming out of school and having a discussion with somebody about fundamentalism, fundamentals versus technical drivers to things like the stock market. And I realized, hey, people chart and look for trends, and maybe that describes some of the, at that time, maybe the human emotion to momentum in trading. But now as any sort of retail investor, it just seems like the game is rigged or has moved beyond us. And to the extent that, okay, I can participate with some portion of my wealth and probably should, what can I do with other portions? Because in just you and I are of a similar age. So you take it back a decade to where you and I sort of met in the last global financial crisis, or 20 years or 25 years, we've seen massive upswings and then complete corrections to the downside. I think if I look at a chart, now we're at another massive peak here, which is why this is such a timely conversation. But before this recovery and run up, I think after the last crash, the market was right back where it was when I started throwing money in a 401k in the mid 90s coming out of school, right? And now we're back at this precipice that people have been feeling for months, and even the last year, a couple of years, is just way overvalued and waiting for the other shoe to drop, sort of thing. So I do get the sense that people realize this and may not be able to do anything about what they've got tied up in some of their traditional retirement investing or hedge funds or otherwise. But in terms of allocation to some other things, getting back to physical assets that either produce real value,
right,
as it used to be when we were buying a share of a real revenue and profit producing company, but things that not only produce value but may just preserve value. And in some cases where over the X number of coming years, something like a stock market may even produce negative returns on average. Something that just holds 0% up or down is kind of a nice idea. So when it comes to precious metals, and you said, hold in your hand physical. So let's just talk about that a little bit in contrast to, I mentioned something like a gold or a silver ETF, which those things became very, very popular and ran up hugely 10 years ago, but they don't have much meaning to them. And I don't know that's any different than what you just described about all the other activity in financial markets.
Well, that's true too. And to the point you were making too, Michael, is 2001, the stock market, if you want to call it the Dow or the S&P or whatever, fell 50%. 2008 fell 50%, and now we've had this 10 years in a row without any meaningful correction. And I mean, another 50% drop would take you back to what? I mean, 13,000 on the Dow. I mean, it wouldn't be unprecedented, obviously, but how many people are prepared for that possibility?
Right.
And I'll give you one more thing. Last week, I read an interview that is unfortunate. I didn't get much publicity outside of maybe on my website, but it was an interview with a guy by the name of Mervyn King, who people listening, probably go, who the heck is Mervyn King? Mervyn King was the head of the Bank of England, basically the head of the Federal Reserve for England, right? England's central bank. And he was the head of the Bank of England during the financial crisis in 2008, 9, 10. Just like Ben Bernanke was the head of the Fed in that period. So equate Mervyn King with Ben Bernanke, okay? So Mervyn King gives this interview, unbelievably frank, honest interview with a newspaper called The Guardian in the UK. And I'd encourage anybody to just Google Mervyn King Guardian and you'll find it. And he said a couple of things that were really, and again, think of Ben Bernanke saying this. He said, one, the situation right now is so dire because of the liquidity crises and the shortage of money, and here's the Fed doing quantitative easing again and monetizing the debt, and the ECB starting to do it as well, all these other things. He said that politicians and central bankers should immediately meet behind closed doors to prepare for the next crisis immediately, and behind closed doors, which means, when do you meet behind closed doors? You want privacy. You don't want to cause a panic, right?
Right.
So that was one thing he said that was in there. Here's the other thing that I thought was even more telling. His actual quote, he said, by sticking to the new orthodoxy of monetary policy, which you don't have to get into what that means. He said, and pretending that we have made the banking system safe. He said that. He said that the central bankers are pretending that we have made the banking system safe. Now, if Ben Bernanke were to come out and be that frank and honest about where we are 11 years after the financial crisis. And maybe it would get more news, but I've been on this, like I said, since 8 or 9. That's exactly right. The banking system and a lot of the banks died in 2008 and 9. In fact, they were technically insolvent, illiquid, whatever, because they put so much of their capital reserves into securities that essentially were worthless. And they were valued if you had to mark them to market, which means, your statement you get, or you go on to Charles Schwab or Ameritrade every day and you see, at the end of the day where everything's closed, the prices, that all your stocks closed at, they're basically, you're marking it to market every day. You're looking at the closing price and going, okay, that's what they're worth right now. Well, if banks did, that's how they were supposed to treat their balance sheets. All these worthless securities were supposed to be marked to market, and they were all, trading at pennies on the dollar. And when you mark them to that price, their capital reserves, they get upside down, they're illiquid, they're insolvent, all that kind of stuff. So that in 2009, they rushed through changes to the generally accepted accounting principles so that these banks could instead mark them to maturity. So you've got these things that are completely worthless in today, and they're going to be worthless at maturity, but yet the banks were able to, instead pricing them at, $5 on a, or let's $50 on $1,000 face value bond, they're pricing them at 1,000 instead to give the appearance that they're liquid. Then QE comes along, and we now see this in the data from, the 5 years released after the Fed did it. The quarantine on the information comes off. The Fed was actually paying a premium and buying, so these worthless securities, the Fed is printing cash and buying them from, Merrill Lynch and, places like that, giving them a premium for them, paying them $1,050 for something that's only worth $50. Okay. To, again, pump up the banks. And what did Mervyn King say? Pretend that the banking system is safe. And none of that has changed 11 years on.
It is shocking. And so it's really not shocking that if he is that frank, that he would need to suggest that it be discussed in private.
Right. And so what it means then, Michael, is that people need to understand. I mean, you can't just, this is where I'm the eyes and ears. Like I say, you can't sleepwalk through this. You can't just be like, well, I watched the NBC Nightly News or I watched CNBC and they said everything's great. No. And so therefore now is the time, and has been the time now for, ever since since 2010, you've got to be alert. You got to be watching every day for what's going on, because, we could head right back into crisis mode very, very quickly. And some of the stuff that's happening at present with liquidity crises that people may be reading about, and this Fed restarting QE and all that kind of stuff, those are pretty stark warning signs. Physical gold and silver, as you said, are basically wealth insurance. They are net worth protection. People get all excited because they might go, gold might go up 1% a day. Woo, hey, I'm making money. Well, really, what you're buying this stuff to protect yourself against the madness, the creation of currency, that just creating it from nothing to paper over all of these other crises, and that's the role that it plays for people. And that's why, again, getting back to what you mentioned earlier, that's why really everybody should have at least some.
And it's so the other thing there that King said indicates that this is something imminent. I like to talk about actionable advice, right? So things that people could act on almost immediately, and certainly education is part of that. It's something that you can offer, and I know it can be found other places as well. But yeah, I really appreciate your humility, your modesty. I know you're not, you don't see yourself as that sort of sage sitting on top of the mountain beckoning to people, but I think of it in a similar fashion. You're just somewhere else on the journey, maybe a couple steps ahead of others, and willing to share some of what you learned along the way. And it's so valuable. And now is probably more than ever the time to act. I had a econ professor in college named John Hussman. He's got a great sort of free monthly newsletter. He's a deep, brilliant, data-driven economist, and all of his models that he's back tested in lots of different ways say that it would be average. It would be reversion to mean to see something like a 60% correction. And of course, that's on average. It could be a lot worse. Could be not quite as bad, but could be a lot worse too. And even at that average, over the subsequent 10 years, his model shows an average return on the S&P of something like 2% per year, right? So if people are thinking about, well, how do I need to grow my portfolio for retirement, or my kids going to college, and how do I protect against the downside, and what are those potential risks if it's even worse than that? I really love the idea of looking at some things that are physical. So if I am, we're kind of midlife, and maybe I want to allocate a portion of portfolio to something like physical gold. What are some common ways to do that, other than so one might be stack a bunch at home or in a home safe? Is it
Right.
safe deposit? Is it a gold backed security? Is it some other sort of international service?
It really is physical metal only that you can hold in your hand, and really you only have to do it once. Yeah, I encourage anybody just to go buy an ounce of gold at a American gold eagle or a Canadian maple leaf coin. Buy one. There's about an abundance of online retailer bullion dealers. You buy one, they'll ship it to you. All you got to do is hold one. I mean, the first time you hold one in your hand, you'll go, okay, yeah, I get it. This, all right, this is pretty cool, and I can see the value in something like this. How do I explain this? I don't want to, go on into a 10-minute discussion of how the markets are a fraud, but the futures markets are used to determine a price for the physical metal. The problem with that is that the trading of the futures contracts in New York, or even in London for that matter, are really unrelated to the physical metal. I forget what I'm getting at. It right now, the volume of total contracts for gold that are traded in New York on the COMEX is something like 660,000. It's an all-time high. Okay, there's supposed to be 100 ounces for every contract. So if there's 660,000 contracts, that's 66 million ounces, okay, of gold contracts. Well, there's only 8 million ounces in the COMEX vaults backing it, okay? So these contracts are created and traded. They're created by the banks, which don't have any gold backing them and have unlimited cash to do this, to issue as many contracts as they ever could possibly need to. And they don't have any metal, and no one ever asks them to deliver any metal on those contracts. They're purchased by speculators who don't have the cash. They buy everything on margin, right? So you put up 10% of the cash, and then they sell those contracts without ever intending to take delivery. So if you're buying it with funny money, with no intention to ever take delivery from a bank, which doesn't have any gold in the first place and has no ability to make delivery, then what are you actually trading? Right?
Right.
The entire system is structured that way, to where maybe 1 ounce of gold is leveraged 100 times in all these different contracts around the world, whether it's in London or Shanghai or wherever all this phony baloney leveraged derivative contracts, futures contracts are traded. So that system works fine until it doesn't. You mentioned the GLD. People think, well, I own gold. I own the GLD. No, you own exposure to the price, but you personally cannot get gold, whatever gold there is in the GLD. You can't get it out. You might own gold in a sense that you're at a vaulting company or something, and they tell you have unallocated gold. What does that mean? That means, well, you don't have to pay storage fees. Yeah, you've got gold. You've got exposure to the price. And, someday if you want it, you can sign a form and give us 90 days and we'll get it to you. And again, that all works well until suddenly it doesn't. And there's a rush for people, and that leverage system begins to collapse like a bank run, where people say, well, wait, no, I want my gold now. No, you got to wait 90 days. No, I want it now. And the 100 different people that all have claims to the 1 ounce supporting the system, they all show up at once wanting their gold. Well, then all of a sudden the thing unravels. And so if you think, as I do, that this entire system is kind of fraudulently based, then the only thing that you want is physical metal that you can hold in your hands. So you can go to, like I said, any of these online dealers. If it's more than you're comfortable storing yourself, most of them have storage programs for you, at international locations, that are audited, by big companies and all that kind of stuff. That's the best way to do it. That's really the way I would prefer to do it. At the end of the day, Mike, I mean, we're talking again about like 2008. 2008 was a crisis of trust and belief, and the banks not loaning money to each other anymore because nobody wanted to take the risk of dealing with somebody else. We call that, the fancy term for that is counterparty risk. Who's the counterparty to your party? Well, the entire pricing scheme for gold and silver is rife with counterparty risk. And, at the end of the day, you just don't want to deal with that. And again, we're not talking like, someone's supposed to cash out their entire IRA, which, there are places that'll let you purchase metal in your IRA. We're not, no one's ever going to sit there. No one says that. But, it would just be wise at a time like this, given everything that's going on in the world, to at least have, I don't know, you pick it yourself, what percentage of your assets devoted to something that's kind of outside the system and outside of that counterparty risk. And that's what gold and silver are.
Yeah, no, there's no counterparty risk in holding a physical piece of gold. I think of this as, if somebody believes that they should own something like an S&P index fund, then they inherently believe in some diversity. They haven't chosen to just buy one stock, right? They want the diversification, and gold or other precious metals would be another type of diversification to their wealth, to their portfolio. So a couple keys there. You mentioned the distinction between exposure to price versus the recommendation of real physical ownership, and then there's the storage question to take care of. And really, so what you described was it's no different than what we all know about the dollar system. You print as much as you want, and that all works until it doesn't work. And I think every fiat currency in the history of the world has collapsed at some point. So there's a point where it doesn't work anymore. And the other thing I think you inherently said is, because of the way that the price markets work that represent the figure at which we trade physical currently, that those are, I'll take a step further, effectively suppressing the price of gold and silver, and have been for quite a while. So now is not only opportune to potentially buy physical as a hedge against other things that are happening, it's also an opportunity to buy it at an attractive, potentially discounted price. So let me just, I'll pause on and ask you two questions, because I know we're going to wrap up here in just a few minutes. So I'll ask you to weigh in on whether I have that kind of right. And then just in terms of, I love the idea of, you hold one in your hand and you're gonna really understand what it's all about. I know you've got a couple girls that are a little older now, but I wanted to ask you also not only about how we educate ourselves, but how we educate our children. I mean, the one thing I did with my son is whipped out a tube of 50 silver rounds and had him play with those. And I think, that's one way to kind of educate children about what this is all about.
Yes. And my kids have got their own little personal stacks, and that kind of stuff. And it's about education, no doubt about it. The one point that you mentioned there a second ago about price, and I'd encourage anybody to do this research. And again, it kind of gets to the other point. I mean, you've got the whole world at your fingers now, with the internet. You don't have to just simply take what is shoveled to you, whether it, by, what were supposedly respected sources, whether that's CNBC or Barron's or your stockbroker or whatever. You can figure this stuff out yourself. Now, it doesn't mean, every video you see on YouTube is somehow authentic, and you got, those people all the time, right? I saw it on YouTube, so it must be true.
Right.
But anybody can go back and look and verify what I've been talking about. I mean, that to your point about the dollar system and fiat currencies ultimately crashing, I think it goes back through millennia, really, all the way back to the Romans, where they were scraping shavings off their silver coins to try to make more of them, right? Every fiat currency says fiat paper money. Fiat currency is just a fancy way of saying paper money. This money that's unhinged from any type of backing, which forces some amount of discipline on the issuer, then they can issue as much as they want. And we're headed down that path now. You listen to all these presidential candidates talk about, all these different programs they want to do. The current theory that people are all think to justify that is called modern monetary theory, which I strongly encourage people to Google, because that's where we're headed, where you can just basically make all the money you want. Who cares? Just create as much as you want and just fund all these things as if there are no consequences. There are no ramifications to, what Weimar Germany did or what Venezuela is currently doing, or Zimbabwe. Anyway, that's the direction this is headed. Gold, getting back to gold, was the financial system post World War II was tied to a backing, had an anchor like that. And the problem for the U.S. is that the world started taking their dollars that they were getting, as the global economy recovered after World War II, and began to exchange those dollars for gold. And so the U.S. lost about a third of its gold reserves in the 50s, and there were hearings on Capitol Hill, people going crazy. So then the U.S., decided, well, okay, we're going to work with other countries to provide physical gold into the market to maintain what that time was the pegged price of $35 an ounce. That was called the London Gold Pool. That worked for about 7 years in the 60s. Then when that failed because of the demand for physical, then there was a period where they didn't know what to do. And in 1975, there was this institution of gold futures contracts. And what has happened since is really what has foiled, magicians and warlocks and wizards since the dawn of time, and that's alchemy. We now have there's still a set pile of actual physical gold, but there's been this alchemized versions of all these gold alternatives, synthetic gold that's just as good as gold, whether it's a GLD or a futures contract or unallocated accounts or whatever. And it gets back to that leverage I was talking about. And so that the system is designed in such a way that, again, it works until it doesn't. And that now can be said, across the investment universe, whether it's the currency markets like we've been talking about, or even, the equity markets and the bond markets. And that's what kind of Mervyn King was alluding to in that article last week. And look, I'm surprised we made it out of 2010, Michael. I mean, 2011, I thought, oh my God, how are they going to keep this together? I remember doing an interview on the streets of New York with a guy in like 2012, where I was like, well, I'm like, just be grateful you've had this time. And now we're in 2019. So maybe, they'll just keep the plate spinning for another 5 years. But eventually, again, as all systems have done in the past, there will be a day of reckoning. And your protection against that is some type of physical gold and silver ownership. And that's what, I don't know, that has become kind of my mission. It was not my intention. Like I said, as we began this discussion, if you'd have told me 10 years ago that this is where this was all headed, if you'd have told me when I was sitting in that Fairfield Inn in St. Louis, Missouri on a Tuesday night in whatever year that was, 2008, that, here's what you're going to do next. I'd have, what? Huh? But yet that is the road that has been laid out before me. And it comes with a tremendous responsibility that I do not take lightly, because I know there are a lot of people out there. I'll write something that'll get read by 50,000 people. I mean, what 53-year-old guy wouldn't want that privilege, right? I mean, that's pretty cool. Anybody that's got even a handful of Twitter followers knows that that's kind of fun. But it's a tremendous responsibility that you cannot take lightly. And man, I pray every week that I'm just inspired to keep an open mind and to look at things objectively and to just do the best job I can. And that's all anybody can do. That's all anybody that's listening to us can do, is to just try to do the best job they can for their friends, their family, anybody else that they impact. And that's why that's why I wanted to visit with you, because I appreciate that's what you're doing with your life and this channel. And I think it's great. And I encourage, people to follow you and listen to what you're doing.
Yeah, no, thank you so much, Craig. I think this mindset and the perseverance to go a bit against the grain and do the right things, as you said, for self and family, is it takes some fortitude, and it takes the right mindset, and a lot of that starts with education. So thank you for what you do. I'm going to go find that Mervyn King Guardian article and put a link to that in the show notes for this episode, as well as I have your website, Facebook, Twitter. It looks like your website is probably the most active place, but it's just such a wealth of knowledge. I think it's a great place for people to start, think critically and independently about it, and then go from there, whether it's deeper with you into a subscription or educating themselves elsewhere. But you've got so much about not only finance and wealth and metals, but really the whole global system, geopolitical, and you also do it with a great bit of tongue-in-cheek humor. So I'm really encouraging people to tune into you, and I love what you do, and thank you for the mission you're on, Craig. I really enjoyed getting to talk to you, and look forward to a lot more.
Michael, it's been a pleasure. Yeah, and like anything else, you don't run off and go build a underground silo and go live, move to Montana because you think this is imminent. But people need to pay attention. You just gotta stay on top of things. And with channels like yours and what I try to do, that's the best we can do, is just try to keep people warned and aware. And that's what we'll try to do. And I look forward to visiting with you again some point in the future.
I look forward to it, Craig. Thank you so much.
My pleasure, my friend.
Okay. I really hope you learned something or reinforced something you knew or maybe felt by intuition there in that episode. As the markets are at historic all-time highs, I think this is a great time to consider some alternative thinking, some perhaps contrarian or perhaps in a way a more conservative approach to thinking about some wealth preservation through the next cycle. It seems like time with Craig is never enough. There's just a ton of knowledge there, as I mentioned. So go check out his website or hit the website at manofmastery.com/027. I'll have links to Craig's website, social media, also some other resources mentioned in the discussion, such as John Hussman's Hussman Funds and his monthly or periodic newsletter. It is packed with detail and depth and information. And then also some wiki links to some of the history in the metals markets that Craig had mentioned. A couple other things. On Instagram, go follow me if you're not already at The Man of Mastery and keep up with more news and information about the podcast and other things upcoming. And one other piece of news or comment, I realized in going back through this episode how my voice sounded when I recorded it, which was a day or two after I had just run back-to-back Spartan Beasts in Lebec, Tejon Ranch, California. But here's the news around that, beyond an apology for my lungs and sinuses full of Tejon Ranch dust and smoke from the tick fires, is I'm looking at the Spartan website and results from putting in a couple more weekends of work out there on the trails with some good friends and family there as well, is I've eked out enough points so far this year to rise up to 35th in the world in my age category for the World Open series of Spartan racing. So 35th for my age category, not bad. Got a few more races to go this year. It's a battle of attrition for me and the other old men. So we'll see how it goes. But that's all for this week. I've got another good one coming up next week, so tune in next Thursday. I'll try to hit the mark on that cadence once again, and have a great week. Reach out to me on Instagram and Facebook at The Man of Mastery.